You may want to avoid going broke in retirement. I don't want to go broke in retirement. Nobody does. And the reason I brought this video to your attention is the following. So many people are being duped into believing that they can take a sum of money and turn it into something different with trading. And while I promote trading and I show people how I trade and how you can trade and the best way to trade, because of my 33 years of trading and experience in trading, I also do not like to see someone getting their pension and then throwing it down the toilet, trying to trade and losing everything. Because if you're going into retirement and you're getting into trading and you lose that money, there's no way back. There's no way back for you to get that money again, because you've just spent your whole life trying to make that and now you've just thrown it all away. How do you expect to get it back? So you're risking your last lifeline on a whim, on trading. Trading is a career. It's not something you should be getting into at the last minute with the hopes of making a bit of extra money. If you want to have a good retirement and you want to make a lot of money, there are ways to do it with investing, and we're going to talk about that. But first, for those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob, and it's Coffee with Rob. And today we're talking about retirement, because I'm old and stuff. Yeah. Good old coffee. Always good. Always a great start. The thing is, most people, when they're 25 years old, don't think about what's going to happen when I'm 60, 65, 70. How am I going to make a living? What am I going to do? Everybody thinks that either they're not going to make it to that age because it's ancient, or money is just going to somehow fall out the sky for them. Unfortunately, it doesn't. And unfortunately, when you get to an age like that, you really need to have either a pension or some kind of serious nest egg. Now, most people, what they do is they go to work for a number of years. How many years do you work for? I'm actually not sure. But you work for all these years, and at the end of that period, they come along and they give you a pension. Now, in the old days, it was pretty secure in the sense that they gave you a monthly salary. It might have been 2/3 of your original salary or something like that, but it would increase every year and you'd live on it until one day when you end up at the funeral parlor or something like that. But anyway, let's not talk about that, shall we? The point being, these days, things have changed. They changed them from pension funds to provident funds. So what happens now is they come along and they say, hey, John, it's time for you to go. Time for you to pack your bags and retire. Here's your package, your few million, your few 100,000. I don't know what it is, but here's your money. Off you go. Now you have to think, well, what am I going to do now? What am I going to do with all this dosh? Where am I going to put it? How am I going to invest it? Who's going to look after it for me? So you think, well, I'll keep it to myself because I've never had this much money in my life. This is an insane amount of money for me. And then you watch a YouTube video and there's some bloke on there telling you that you can turn $100 into $1 million, or you can turn $1,000 into $1 million. And this is easy money. And this is how you can trade your money. So what do? You take that last lifeline that you've got, that last bit of money, and you start trading with it on leverage trading. And then you start losing. And it's one of the worst things you can do with your pension. It's a bit like going to a casino with your pension. It's not much different. You have to be really careful. What I would do with a pension like that, what I normally tell people when they're in their 20s or in their 30s, is start investing now. Start buying shares. Start buying as many shares as you possibly can when you're a young man. And then every month, add to the account and keep on adding to those shares. And you'll be surprised, over 30 years, you'll turn a small amount into a gargantuan amount of money. And I've proven that to you over and over again in previous videos. It's called time in the market and investments. And if you invest in the right products, the right shares, then you'll get dividends on an annual basis, biannual basis, and you'll also Get growth shares where they grow to humongous sizes where you can actually take some money back if you need it. So when you get older, you'll have this big lump sum, this big amount of money, which is generally just paying you every month and you don't have to touch it. Now, I call that type of investing set and forget. Now, if you're not disciplined enough to do that yourself, if you're not disciplined enough to leave that money there, then get someone else to do it for you. You get these big investment banks that'll do it for you. But bear in mind that the big investment bank will probably give you about 15% back on your investment, whereas you'll probably make about 35 to 40% per annum if you do it yourself, if you take into account all the dividends that you're going to get back and all the cash that you're going to get back from the growth of those stocks. It's actually better if you can actually do it yourself rather than letting someone else do it for you. But what do you do if you're 60 and suddenly you get that package, you get that money and it goes into the bank account? Now, we all know that in most countries, the interest rate's very low. It's probably 1 or 2%. At one stage, it was on a negative. You had to pay them to keep your money. You're not going to get much of a retirement out of that. And if you have a sum of money and you weren't to get any interest on it at all and you wanted to take your salary out of it, how long is it going to last you? How many years have you got on that money? One of the best ways to place that dosh is to either take it and, like I said, put it with an investment bank in an investment account and let them grow it for you if you just don't want to touch it. Plan B, though, is to take it and split it among a number of shares. Find some dividend-paying shares, find some growth shares, put it in there. Even if you are 60, 65, coming up for 70, you're not going to see much growth in it because it takes 30 years to grow, or at least 20 years. But you will recover something back from the actual eventual growth. You will be getting dividends back. You will be getting payments back. Of course, the other option is to find an investment account that will give you a guaranteed 10 or 15% per annum. But don't take that money and start immediately investing it in trading. If you want to get involved in trading, that's fine by me because I'm involved with trading. I've been involved with trading for 30 years, 33 years. I know how to trade. It's leverage trading. I know what it's all about. I know what the risk factor is. I always tell you guys that you've got to watch the strategy. The strategy is the most important part. But what actually ends up happening is somebody gets that lump sum, and it might not even be retirement. It might be an early they let you go and they gave you a retrenchment package or something like that. Now you've got this lump sum of money, you can't get another job and you're desperate to make money. Desperation is one of the worst forms of psychology when you're trading. If you're desperate to pay those bills, if you're desperate to make that money on a weekly or monthly basis, it works on your fear, it works on your psychology, and it sets you back. And it sets you back rather badly. I used to hate prop firms, I used to hate funded accounts. Until this year, I realized that they've got their place. They've got their place in the market, and that is for this and this reason and the sole reason alone. Most people will go on a course and they'll go and learn how to trade because they've figured out that they really need this now. They want to make this money as quickly as possible. So what's the best way to do it? Go on a course and go and learn how to trade. And there's a lot of guys out there promoting these courses to you, and you think, wow, that's great. I'll get involved in that and I'll go and learn how to trade. The big issue being you go on that course and then they convince you that you're going to make money. They convince you that you're going to be successful because obviously they want you to think that because you're paying them for the course. If the course was completely free, then they might tell you the truth. But because you're paying thousands of dollars for this course, they're not going to tell you that. What they're going to tell you is that you're going to be hugely successful. So they'll put a demo account in front of you. Now, what you have to understand about a demo account, number one, you're trading on squiggly lines. And squiggly lines don't make you money. Charts don't have a predictive capability, and charts or win rates cannot make you money. All they can do is give you an opportunity to take a high probability trade and manage your risk. So the only thing they teach you is that you need to trade on this system that they give you. I know there's all these ICT systems, MACD systems, and all these different systems that they give you. So you learn to trade on the squiggly lines and you learn that system. Now, on a demo, there's no risk. There's no worry. There's no fear. There's no hassle. It's just basic maths. It's just basic, straightforward trading. So yeah, I can offer you an edge on a chart with no risk. That's easy. I can teach that to a primary school child very easily. So what happens is you get involved in trading on a chart on a demo. And on that demo, you feel hugely successful because you do quite well. Because there's no risk involved. There's no fear involved. You can literally watch the trade do whatever it wants. Then you go home and you think, well, I'll take my pension now and I'm going to start trading and I'm going to start investing my money into these trades, this leverage trading. And then you start losing and it becomes a shock to the system. And then you start getting desperate and you start doing silly things to try and get the money back, and it gets worse and it gets worse and it gets worse. And instead of making money for the month, the year, the day, whatever, you end up losing money. So you end up with less than what you started with. But you don't walk away. No one walks away. Everyone goes back and tries even harder, and then they lose some more. What you have to understand, day trading and swing trading, well, effectively, let's call it position trading, where you trade on a daily chart, you trade on a 4-hour chart. On that type of trading, on average, 70% of traders lose money. And you're thinking, I'll be part of the 30% that's successful. I don't know why you're thinking that, but you are, because we're human beings. We all do. But then you get bored trading on those levels, and you drop to the 5-minute charts and you start becoming a day trader, where effectively 99% of traders lose money. But you think you're going to be part of the 1%. Why? I don't know. You just do. This is one of the biggest issues in trading. What you don't understand is that you are less than 5% of the market. Retail traders. We get into the market and we start trading and we think we're going to beat the market. But 95% of the market is institutional money. It's big money. And that's what moves the markets. Not you and me. We just ride the wave. They move the markets. They're not hunting out your stop loss. How many times have people said to me, they're hunting out my stop loss? No, you've put a for sale sign out. You've advertised where your stop loss is, and somebody's looking for liquidity, so they're going to pay and buy what you're selling it for. That's as simple as it gets. That's the whole point behind this. If you don't want to go broke in retirement, be very careful how you get involved in trading. What I would do if I was starting today, and not all those years ago, and if it was new to me, I would do the following. Get a funded account. And I would take that account and I would learn to trade with it. Why a funded account? Because there's some responsibility with it. Because you can get a commission off it. And if you don't do well, you won't get the commission. Because you've paid for the account, so there is some risk. So there is an element of fear that will come into your trading. There is an element of fear of missing out. There is an element of impatience that will come into your trading because you're trying to make money with the funded account. Admittedly, when you start using your real pension or your real cash or your real money, then the fear will become 10 times worse because there's much more at stake. But by the same token, you will have learned something along the way. At least if you spend a bit of time learning how to trade like that, by the time you do get to the real money, at least you'll know where you stand. At least you'll have an understanding of how good or how bad your trading is, what your risk threshold is, what your balance is, and where you need to be in the markets. But if you do want to take on trading, and you do want to learn about leverage trading, how to trade Forex, how to trade crypto, how to trade on the stock markets, or even how to buy shares, then watch the channel, subscribe, stay with us, because that's what I do. I show people how we trade, and I show people the reality of trading, because it's a career. It's not an easy game. It's not something you just jump into and Ferraris fall out the sky. So I can take you along a road where I can keep you competent and safe in the environment where you manage your risk. Go and watch my previous videos where I show you how to manage a strategy. Because charts will not make you money in the markets. The only thing that's going to make you money in the markets is a proper strategy. And my 3-step strategy is the easiest, and it's in all my videos. You can go and watch it. I don't think I'm going to go over it here today because it takes such a long time to go through it every time to show you the strategy. But I do need you to understand that if you're going to be in leverage trading, you have to follow a business plan and a strategy. Otherwise, you are going to lose your money. Do yourself a favor, join the members area where I put out a trade of the day every day, and I give the members a few perks and what have you, and I give you quick answers and replies to your questions on trading and that sort of thing. But if you are into trading, stay with the channel. If you are retiring, be very, very careful with that money. Don't throw it away. And if you do need a funded account, there are links in the description for you there. If you want something like that, you can get it. Just my 50 cents worth, guys. I don't want you to go out there, take that retrenchment package, take that pension package and throw it down the toilet. It's just not the way to do it, guys. Be very careful, be very wary, watch what you're doing. It's the last chance. Remember that. The money is not going to come from anywhere else. Thank you for watching. Keep your feet on the ground. Reach for the sky. And I'll catch you on the rebound. See you soon. Don't forget to come back for the live shows on Tuesday and Thursday, where I'll answer all your questions and we'll talk a little bit further. Cheers, guys. Ciao and bye.